Welcome back. I'm Ramesh, Damani on Wizards of Dalal Street. I'm chatting with the CIO of Franklin Templeton, ANAND RADHAKRISHNan. ANAND, one of the disciplines as a fund manager you need is when to sell. What is your selling strategy?
I think when one invests in the market, we have to leave some money on the table for the next buyer. So one of the things which we always try to believe is that you don't try to catch a top in terms of a share price or its valuation. So once we have that approach, more often we may be a little bit early selling into a stock, but we'll never be late.
Does it cause angst within you when the stock keeps climbing? Like you could have sold iShares, say, at 10,000 and it kept going up after that.
We have sold iShares from 5,000 level onwards to right up to 20,000 level. It's been a good performer for us. So when you look back, probably we could have held back some of the positions and all, but this is a discipline. It might not work in one pace, but on an average this works fantastically, and it also prevents your portfolio from getting overloaded with winners.
Lopsided, yeah.
So doing top slicing is a discipline which you follow.
What is your discipline in terms of a stock not working out? Suppose you buy a stock and it's down 10%, 20%. When do you throw in the towel?
When your thesis is totally wrong, when underlying assumptions with which you have bought.
But based on price or based on some assumptions that you relook at?
Based on our thesis, you have to relook at. Price is, if your underlying assumptions have not changed dramatically and only our initial purchase price was wrong, it is still probably, and in this level price, it is probably worth a buy. You'll continuing to hold on to a stock is equivalent to buying that stock afresh.
Yes.
So we would like to hold on, but if the underlying thesis itself has unraveled and has not played out the way we would have imagined it to be playing, I think we gulp it and sell it. That's the way to do it.
Yeah, but if it goes down and your thesis holds, will you average down?
We will average down.
You're willing to put your checkbook there?
We will put the checkbook there.
Right. What is then your overall arching philosophy? You told you like growth, you like discipline, you have an investment hypothesis. 20 years into your career, if I asked you, what is your style? Can you give me a summary?
I think if we believe that the company is better than what people are thinking it to be, that I think is the big opportunity. So the whole idea is to, in your understanding, is it coming out to be better than what the market's understanding of that company is? It should be better than what, even if it is a good company, market may be thinking it to be a good company, but if you think it is a superlative company and therefore it warrants a big bet, so we go out and bet that. That's a kind of style. That's where I think a lot of money is made. Wherever there is a deviant views, that's an opportunity to
Does it surprise you that how many times markets does get it wrong or do get it wrong?
It surprises me enormously, because I would like to believe that over a period of time market becomes less responsive to the high frequency data points and more behaves like weighing machines, like Mr.
Buffett
famously said that markets are like voting machines in the short term and weighing machines. But it surprises me to see that even today, or even during the current time also, more often than not, the shorter term markets behave like voting machines.
Who do you admire? I mean, in so many years in career, whether it's India or American, which fund manager have you admired or whose style you've looked up to?
20 years, we have seen all kinds of cycles. I think even domestically, we have had quite a bit of fund managers who have done pretty well. So I have a few people, I mean, even my own firm, I have my predecessors who have done a fantastic job. Shiva, K. Shiva Subramaniam and Sukumar,
a lot of good compounding.
Fantastic investors,
right,
in their own right. And some of my other peers have also done a very brilliant job of delivering consistent returns over long terms. So they have to be admired.
To the new batch at IIM, from where you graduated, if you had to suggest to them what they need to do to prepare for a career in fund management, what would they need to do?
Fortunately, they have lots of body of knowledge and material right in their fingertips today than what we had 20 years back.
Which is the net?
Which is the net.
Right.
So it's almost like all the theories of investment management, all the styles are reasonably documented and available to individuals.
That's theoretical. On a practical level, can you do anything to make himself better?
Practically, of course, they can go and invest on their own.
That helps always, doesn't it?
Pardon?
That helps
That's probably
always.
the best. It's better than reading books.
Losing money helps a lot.
Yes. and provided the parents give them some money. And
Which is how you started your career, right? You invested in IPOs?
yeah, I invested. My first few months' salary after my engineering degree, I went and stood in a queue in Surat and applied for an IPO. The company no longer exists, but nevertheless, I'm very proud to say that I went and stood in a queue there.
It was a cheap education in
Yes.
retrospect, right?
Yes. So I think investing on your own definitely helps.
Great. You've had a brilliant career on Dalal Street from Chennai, being away from Bombay. Has that helped you in your career?
Distance brings objectivity and also reduces noise. And I think it's kind of being in a quiet environment helps you to focus on reading the financial statements better, and also think also in a slightly different manner.
Less noise.
Less noisy.
Great. Thank you so much for being a guest on the Wizards of Dalal Street.
Thanks, Ramesh. It's a pleasure to meet you.
We'll see you next week on another episode of the Wizards of Dalal Street.